Why do we consistently underestimate the ability of shale producers to actually just say low price is fine, we'll adapt to that? Why do we keep doing that, and why does the IEA keep doing that as well?
Well, I think that we've expected that shale was going to come back. We grew 5 million barrels in a period of 4 years. We peaked about in April of 2015 at 9.7. We're down to about 8. So we've already come off 1 million barrels. Energy technology in the U.S. is the best, and they're able to drive that cost structure down, and that's why they've been able to make it really at any price level.
You know what I'd say, Jonathan? Shale's here to stay. That's what we found out in this down cycle. And the reason why is because the U.S. has done an exceptional job of becoming one of the lowest cost providers of oil in the global markets. And that's really a surprise to everyone, I think, as this whole process has unfolded.
But given that, how much difference does the Trump administration make? I mean, he really embraced energy through the campaign. Does it really make a difference, or is the technology and the price really going to drive it?
David, here's how we look at it at Tortoise, and we've been looking at the energy sector for over 20 years. Whoever the president is, it doesn't matter, because the economics never lie. And what we know the economics tell us is the U.S., whether it's oil or natural gas, is one of the lowest cost producers of both energy commodities around the world, and we're getting even cheaper. And so that's a great thing for energy demand as well around the world. Providing low cost energy to the rest of the world is absolutely critical, we think, and really beneficial to the sector going forward.
That's the fundamentals for a strong industry, as you point out, but the extra layer of that is whether Trump boosts infrastructure and that boosts demand, or whether actually you just get this massive infrastructure spending story directly in the energy sector that supports the industry anyway. Which one's it going to be?
Well, I think that he does plan to focus on general infrastructure, but the energy infrastructure in North America was going to be built out anyway. Trump coming in, what the change there is there may be less of a regulatory burden, and which will help these pipelines. There's a big permitting licensing process, as you can imagine, to lay pipelines across the country. So I think what Trump is going to do is hopefully realign the focus so that we've had 20 pipelines that have been canceled, especially in the Northeast. And the most important thing for an economy to continue to thrive is to have cheap and abundant energy, as Rob mentioned. You can have as much as you want. If you can't get it to the right places, i.e. through the infrastructure, then that creates the problem.
So one of the issues has been coal, actually. The supporters of Donald Trump have been very pro-coal. Yet she had a lot of problems, Hillary Clinton in West Virginia. How relevant does coal become in a Trump administration?
Yeah, well, you know what? We think that coal is probably becomes irrelevant no matter what, and it's back to the economics argument, right? It's when we look at natural gas, right? The U.S. is really the Saudi Arabia of natural gas. We have more natural gas than we know what to do with, which is not a bad thing. We're actually working on trying to export that and utilize that and improve our trade deficit because of the tremendous resource in natural gas that we have. Natural gas then replaces coal as a power source for electric utilities. It's a great solution because it improves emissions and reduces carbon dioxide emissions, really not only in the U.S. but also globally. So,
Libby, one of the great things you guys do is you take all of this and then you think about how to express it as an investment. How do you capture that story in the market? Given the repricing we've already seen in the last week, where do you go?
Well, I think the play in the energy space is the midstream sector. It's the pipeline business. That is a business, no matter who got into office, as Rob mentioned, was going to continue to do well. And now with this less regulatory burden, you're going to see $500 billion of energy infrastructure. Doesn't need to be financed by the government like some of this other infrastructure. That's going to be built out over the next few decades. And that's where the opportunity is in the midstream, publicly traded midstream companies.
And the only other thing I would say is yield is really important to investors right now, right? And in the midstream sector, as Libby pointed out, the yields, the current income that you can get, 5, 6, 7%, with growing distribution streams or dividend streams, is really important if you think that the 10-year Treasury rate is going to rise and the federal government is going to raise interest rates over time.
We've managed to have this whole conversation. We still haven't discussed what's happened with credit and what this could mean for these players, and we still haven't discussed OPEC. Now, we thought OPEC had pretty much put a floor in crude about a month ago. Not so much anymore. What are your thoughts on that, Libby?
So I think that we need to get through the OPEC meeting, whatever their decision is. I've got to say it's probably fairly well priced into crude. Supply is coming down. Demand is staying constant. Inventories are coming down. We may have these bumps in the road, but we are going to get back into balance fairly soon. And so it's quicker if OPEC cuts. It's longer if they don't. But the trend is already in place.
Yep. Rob, I also wonder about secondary effects. There are other things that the Trump administration is proposing, things like tax cuts across the board, things like trade restrictions. How could those affect some of the energy companies in different ways? Where is there a divergence here?
Yeah, well, hopefully the economy grows. And if the economy grows, demand for energy continues to grow across the world. And so as long as the economy grows, that's a great thing for the energy sector. You know, the energy sector is really a critical component, a critical puzzle piece, no matter what sector you're in. It really connects. It connects technology. It connects healthcare, it connects consumer staples, and it never really gets enough credit, I think, for really the value it provides, not only to just the sector itself, but other sectors as well.
So, Libby, same question to you. Who's going to do better and who's going to do worse? Rob tells us everyone's going to do somewhat better, but there has to be a divergence. Which energy companies are particularly positioned to benefit?
Well, I think global multinational companies, if we do have some type of trade restrictions, that may be an issue. But I think for domestic companies, as Rob said, everybody's going to benefit. Any type of issues with NAFTA, we're looking for big demand coming out of Mexico for our natural gas. The tariffs are on incoming products, not outgoing products. And reality is Trump's a great businessman, so putting tariffs and stopping free market, I don't know that he's really going to follow through with that. So we see the energy sector continuing to do well, and as I said, the midstream space really doing well.
We'll talk about NAFTA in Mexico in particular. The price just went up when paid in Mexico pesos, if they're going to be importing natural gas. How big a disruptive factor could that be?
Well, that's a good point. If we see natural gas supplies tighten in the U.S. and start to lift, that could add. But from the level that we are at now, I'm not sure that really is an issue.